General approach and methods. Today, November 26, 2025, I am analyzing the main cryptocurrencies on higher time frames, H1 and H4, using the profile map and volume heat map gradient indicators. My focus is on identifying key zones of buyer and seller activity, tracking current dynamics and trends to derive forecasts for the near-term movements. Let's start with Bitcoin. Key levels and buyer reaction on BTC after a drop to the 82,000 zone. Bitcoin stopped. This was confirmed by a deep wick on the daily candle. Then on the H4, a rebound occurred. Several climax bars with high volume showed that the buyer was actively pushing the price in the 82,000 range. It was here that the buyer prevailed and pushed the price higher. On the H4 chart, there are currently two important local zones, 84,700, 83,800, from which an upward breakout has already occurred, and 88,000, 86,500, which is just forming. It is still unclear who will win in this new zone. This zone is the one to watch now. Bitcoin price movement scenarios. If an impulse emerges towards the 90,000 zone, we will see a continuation of growth. The main scenario now is recovery, correction, testing, and then further upward movement. No reversal setups are visible either midday, although the recent attempts to break upwards were unsuccessful, and this can be perceived as some weakness of the buyer. In practice, this is more of a short-term phenomenon due to the appearance of new sellers. If sellers get involved and show strength, I expect a pullback to 84,500 and possibly a further retest at 87,000 to check seller control. Until a clear downward impulse appears, the main working scenario is buyer support and upward movement. On the map profile with a period of 20. Current volumes are noticeable in the 86,000 zone, as well as a stronger previous zone, 92,000. There is an ongoing struggle between short sellers who accumulated positions around 92 and new buyers attempting to break the current trend. 91,500 is a level with a high probability of a downward rebound, serving as a marker for evaluating the positions of both sides. Moving to M5, we see an important zone with a core near 86,700, as well as a fresh one forming 86,850, 87,700. Previously, the buyer controlled the previous zone. The seller did not support the last impulse down, and the price reached the liquidation zone of traders with 30 DEX leverage, then 20 DEX. Analyzing the delta over a 160 period, groups of sellers can be seen in the area of 88,300 and 87,700. Their positions are currently in profit, and the further scenario depends on this zone. If the market goes up, the first goal is to push new sellers out of their positions. The target zone is about 94,000. For buyers, an important area remains where most of their stops were knocked out earlier, so it retains relevance as a liquid zone for new buying attempts. Risk zones for sellers and long traders, BTC. The main targets for sellers are 85, 84, and then 83,000. It is exactly here that borrowers with high leverage are most often trapped. This group could be liquidated right now. The current aggressive seller is still in profit after 2 retests and a protected position, but this scenario should be considered alternative because the priority is with the buyer. As long as the strong previous zone holds, local entries and exits based on delta remain secondary information, while the main data is provided by the distribution map of major positions. If the price reaches the first target for the seller, then I consider a test and potential continuation of the decline. But until this happens, the seller has no clear advantage. The situation with Ether resembles Ripple, 2 waves of impulse upward after a pause, with a climax of large volumes across all markets. Now a pullback is underway, with low volumes. This indicates not so much the strength of buyers but the absence of sellers. The heavy seller load remains in history within the 4,300–4,350 range. Currently, the 3,900–3,800 zone looks key. This is where sellers last exerted pressure, but after several new waves with climaxes, seller exhaustion is visible. For a stable reversal, new accumulation is needed, which is currently absent. Only local position builds exist, even if previous sellers have unloaded. Without new long entries, the buy side will be of low quality. The current correction has already passed 46%, which is usually enough to complete a standard pullback. However, the final reversal is possible only after clear accumulation and setup appear in the 3,200–3,150 zone. Until then, further attempts to shake out the last week buyers in the 3,160 segment are possible. There is a high probability of buyer pressure weakening and a new decline ahead. If the seller remains strong, we may immediately see a continuation of the drop. If the market enters an accumulation phase, consolidation at the current prices over the next several weeks seems logical. Real opportunities for buyers will only open after additional volume is accumulated at the bottom. In the short term, only a retest of the maximum can be expected, after which a test of the seller's strength will likely follow. On the higher time frame, intraday, the last strong buyer supported the correction from below zones 2,836, 2,800. Currently, a new zone of struggle is forming. If the price moves there, it is not a fact that this is a true reversal, and most likely another rebound will occur. For the buyer, retests at 2,833 are interesting, as well as technical rebounds at levels 2,940, 2,916. If after the impulse down the seller resists on the retest, this will confirm the importance of this zone as a point for counter-trend trades. So far, the daily dynamics are controlled by an uptrend, but only a breakout of the current buyer will show that the market is losing control, and then the structure will change. For a bearish setup, an upward impulse is first needed, followed by a strong breakout down. This scenario is hypothetically possible in a few days, but is still under the buyer's control. On Ripple's global profile, period 160, the wide seller pressure zone of 2.5–2.2 is critically important. Its core is 2.4–2.5. The fresh activity zone is 2.3–2.2. This is where a strong seller last appeared, and testing is currently ongoing. Buying is now risky. After two upward impulses, the probability of a rebound is high, and the potential for movement is limited. If long positions are sought, it should only be after a correction to the zone 1.95–1.90. This is the technical base and the point for intraday rebounds. Ripple conditions for positional buying. Positional buying requires a breakout and reversal of the 2.3–2.5 zone, specifically up to 2.65. Only in this case will sellers be taken into losses, and a phase change for growth will begin. Such a movement can last several months. A similar structure has already been observed since the end of October. It is especially important to break through historical highs. There is a concentration of sellers' stops, and a price breakout above will trigger a powerful short squeeze along with mass liquidations, 20–33% for those who used leverage. The first signs of such a wave are an impulse upward to 2.6, followed by a pullback test, and only after that the third wave of growth. However, this is currently an alternative scenario. It is advisable to act on it only after the emergence of buyer strength. On M5, the key support remains at 1.88. If we return there, a bounce is expected near this zone. Intermediate points are 2.06, 2.04. And the formation of fresh volume near 2.18, 2.20. The price is currently hovering here. If there is a downward impulse to 2.15, this is a protection zone from which a bounce to 2.05 is possible. If the market moves upward, an important target is 2.28 resistance, breaking which could trigger a new wave of growth. For now, the risk is getting stuck in a flat. The structure will consolidate only after a series of confirmations, recognizable reversal points. Until then, the local dynamics provide a chance to try storming the 2.2 level on an upward impulse.